because I was watching this play out, but price beautifully comes into the M1 imbalance fill. Could even be aggressive and put a stop loss there if you really wanted to. I wouldn't do that personally. This is a fine stop loss. So if you're going to be really safe, 2.8 pip stop loss. Play on, and look. Now we're in the money. Price is looking real bullish now. That bullish move there on the second time frame, that wick, it's come back down. Again, it's giving me another order flow entry. Boom, blown through. Absolutely blown through. Easy, 10-hour trade. What's happening, family? It's your boy Roms again with another trade video. So today, this video is going to be all about the importance on the draw, or the importance on the draw on liquidity, or the importance on having certain price targets. And the reason for this is because when you've got a price target on the higher time frame, it means that you're able to stack trades on a lower time frame, or it means that you know what you're looking for on the lower time frames to present before you get into the trade when you're trading, towards the higher time frame target or even against it. And I'm going to explain what I mean now. So just hold on for me. Tune in, stay focused, and you're gonna get value from this. So we've got GBP USD here. So I've gone on TradingView and I put on replay mode up until say last week Thursday. So I'm recording this on the 8th of April, and up until last week Thursday, which was the 4th of April. But I want to make something really clear to you about the price action, and this was a great example. I'm actually going to show you that a trade that I went for, two trades that presented. Actually more than that, there's a couple trades in there, but I'm gonna break them down in just a sec, all right? So first things first, you've got here the H1 time frame. I'm not even gonna go into the hard time frame. So if I go into the 4 hour, you can see what's going on here. I'm not gonna break that all down at this moment in time. I'm gonna focus on the 1 hour time frame, because that's all that's important at this moment in time, and what I want to break down for this video. So what you can see here, first of all, is you had these consistent mitigations here. So you had the sweep, new low, and you had the consistent mitigations from price action in here, just respecting the highs and consistently mitigating price, as I spoke about in the last video. If you watched it, if you haven't watched it, I recommend going to watch my last video about learning about my main trading model and trading strategy. All right, it's very valuable. So you can see what price did there. It kept mitigating and respecting the order flow on the higher time frame, on the 1 hour time frame, and then price took out multiple lows, 1, 2, 3, 4 lows. Right. So you look at this, and you can see this is here. Price has just taken out these lows. So when price has done this, what can we expect price to do next? If we look at this area of price action here, this doesn't look like anything that you can expect price to reverse from. To me, maybe to you as well, it just looks like liquidity. So you got semi-equal highs up there, but then more importantly though, you've got all these, that series of mitigations there on the lower time frame looking like liquidity on the higher time frame, right? So if I'm looking at this now, once the inducement to the low happens, and all of these lows are induced or ran, however you want to explain it or describe it, we can expect price to then reverse and trade the other direction, and it does, right? It gives us first of all, it gives us, I believe this is a failure swing because it respects this low, I believe. And then you can see here you got the internal lows taken, and then you got the new highs made after the internal lows are taken. It's the same thing that repeats itself over and over again when I talk about the way that I trade. And then, but what happens now is, okay, now you're looking at, okay, where's the next target? So first things first, the first target for me would have to be up here in this high here. That would be my first target. And the reason why it would be my first target is because of what I mentioned in regards to the liquidity. So the liquidity here, you got these series of mitigations that clearly look like liquidity now on that time frame. But what else do we have? We also have these series of mitigation, or the order flow. And this order flow, initially, yes, is respected, and the mitigations are consistent, and they are, happen one after the other. However, once the target has been hit, when I say that, what I mean is once these lows have been taken, and this low has been taken and induced to the low side, we know that price wants to take liquidity on the opposing direction. So if we can expect that to happen, then for me, the way I'm looking at this, I'm like, okay, I'm expecting all of these mitigations to be ran. I'm expecting this whole series of order flow to now be ran on the opposite direction as liquidity. So for me, the next target for me, the main target for me would have been was actually here. And this is where now it gets interesting, because you can look at this and you can think, you know, why in the world, I'll put this target 2, yeah. Why in the world would you want to buy from these zones, yeah, into this when you're in such a premium area of you know, the trading range as a whole on this time frame? So that's, you know, you're ignoring this for a second, because at the same time on the 4 hour, this is, you know, this is the premium area of the range. However, on the lower time frame, you could say that, you know, we're looking at, we're almost about to hit our target of liquidity, so we can expect some kind of reversal soon. But we've not hit that target yet. However, you know, most people would think, you know, don't bother try to take buys into the target. Why don't you wait for this target to be taken and then wait for the sells? And you know what? That's valid. That's a valid point. It's not necessary to take trades from these zones, waiting for mitigations to then go up, and then waiting for the sweep, the break, the trap, and the entry to come. There's no need to wait for that. However, if you can recognize these things in the market, why not take the trades? If you know that it's, you know, high probability, why not take the trades? And this is why it's, you know, it's useful being able to take trades on all different time frames, and it's useful having a trading model that is fractal. So now I want to go down into the lower time frames. Down to the 15-minute, because now we've established that I'm not expecting a reversal until this target 2 has been hit. Because the target 1 has been hit, and you can see here that we've not had a reversal yet. Price is slowing down. Yes, price is also clearly like building up, or at least like here building up, and you got the, you know, it's looking like order flow. You got the sweep here, right? So I'm looking at this. I was looking at this last week, and this is when I was live in the market. I was looking at this last week. I'm like, okay, I want to take a buy within these zones here, to then go higher and take it into target. And this is my take profit would be. Okay, so looking at this now, you know, where would a valid entry be? And this is where you have to go into the lower time frames to make sense of things. Because yes, I've got the sweep, and I've got a new high that's been made. So I'm not expecting, apologies. I'm not expecting this low here to be taken. I'm expecting this low to hold, right? So if I go down to the 5-minute though, I'm like, okay, things are getting a bit more clear now. But what exactly am I looking for? And this is what I actually did. So I looked at this. I saw a couple of things. The first things first, before I even look at the buy that I went for, I'm actually going to show you the couple of sell opportunities that were here as well on the smaller time frame. Because you had the sweep of this high here, and then what you could see here is price on the M1 now beginning to, or maybe you can see the entry straight away. But price is beginning to show reason, you know, to trade back into the trading range on the M1 and give us, you know, some bearish trades into the M5 discount area of the M15 or M5 range, right? So if you look at this now, you can see here price took liquidity, and then what did price do? First things first, it gave us a nice, you can say, you know, a break of structure, say here, and it gave us even this low as well. You can point out maybe even this low here, right? These are all valid areas depending on how you trade and how you want to look at it. But what else did price do? Price engineered liquidity, you know, all here, and here you can see price engineering liquidity, right? So there's no need to be taking sell trades from here. But remember, why would a sell trade be valid up here at all? Because I'm yet to hit my target, but I know that price could give me an entry, right, back into a buy zone for me to take into my target too. So what I was actually looking at for my buy zone initially, guys, was actually this at the time, right? And I'm gonna break this down in just a second. So that's what I was looking at initially. And why was I looking at this zone? So I was looking at it because we had, you know, this sweep, we had, and then a new high. We had this run of liquidity, and then this sweep, and then new high. So, and then you had liquidity directly above my entry zone. So if you look at this, and you look at this as well, you can think, you know, maybe this is an M1 order block as well. And you had kind of order flow. So it made sense at the time. So as price is playing out, you can see here, what trade opportunity number one to sell. stop loss above the high. You know, if you want the real refined entry, you could go for the M1 imbalance fill. However, I've mentioned in my last video, for the sake of consistency, I like to enter above the liquidity. So it will be above this high at this point. That's what I would like to enter, ideally. So then if I target these lows, or my potential entry zone, about a 4R trade. So realistically though, below the liquidity, say let's say 3.5R. So that will be the first target. And then another opportunity, price comes down, you know, gives us a small BPI zone, comes back up again, and then gives us a failure swing. So the failure swing happens because price came down, came back up, failed to move lower, failed to take the high, then it moved lower, and then price kept coming back up. So the question now is price going to take out this high, or is it just going to take out this high? And sometimes this is easier just to go on the higher time frames just to see. So you see straight away on the M3, this is just a nice, I'm just wait for a second. This is just a nice order block on the M3, and on the M5 again, look, it's a nice order block with a wick that's mitigated this wick as well. So you probably shouldn't expect this wick to be taken. So you could look at this and think, okay, back on the M1, you can see that this is more likely going to be the liquidity point. I'd like to, for me, like again, I would enter here rather than above this high. Although this would have been the ideal entry in regards to optimal entry for RRR. But let's say I just took the easier entry, stop loss above this order block, which was the order block on the M3, and then, you know, targeting these lows again. Again, this is a poor, really 2R trade if I'm targeting this low. So maybe it's not worth it. However, if you're able to get the optimal entry and enter here, it immediately becomes a much better trade. 1.8 pip stop loss with spread, let's call it 2 pips, 2.1 pips. It's still a 5R trade, right? So these are other opportunities using the similar trading model in the sense that, you know, sweep of liquidity to the left, break of structure, a trap created. This time it was like a trend line trap, entry. This time, mitigation of the high respected, showing order flow, price moving down, price moving down, rejecting the high, come back down, and then price come back up into the final candle, bullish candle, then giving us a failure swing, breaking this low. And then, as it's done that, price come back up and give us another failure swing, but what that's actually doing is just engineering liquidity again, giving us liquidity to take into the entry. So ideally, the easy entry would be that one, but the optimal entry to make it worthwhile would have been this one, targeting the liquidity, and then boom, right? So what happens next? So I'm going to show you how I actually took a loss, and I'm going to show you where I actually wasn't focused because I took a loss and then I missed out on the real trade. So what I did was I saw this, like I said, I saw the sweep of liquidity, I saw the new high made, so the sweep of liquidity, the new high made. I'm like, okay, I know price needs to take liquidity on the sell side before we go bullish again. But I saw this trendline liquidity, and I believed, this could be enough. And I saw this, this wick, this hidden base area, and on the M1, this was also a nice potential order block. So I was like, let me just take the easy entry, looking at it, and just set my limit on the M5 imbalance fill. Stop loss here, 2.5 stop loss. Target my final extended range liquidity, 8R, and then call that a day. Easy trade. So I set my limit, and let's see what happens. Straight away, look, clapped. Stop loss absolutely clapped, right? And I'm gonna go back a bit more because I want to show you something else where I missed the real trade, and it's just something that I wasn't paying attention afterwards. That's a lie. I was paying attention, but what happened is that my psychology was fried. And I'm gonna explain what happened. So this was my loss that I took. I set a limit here. You can see on the M1, price failed to give me a small response, and then just blew straight through my POI and my stop loss. So we can put that down here as a loss that I took, which is absolutely fine. And for me, it's still a valid trade in the sense that, I didn't expect price to. The reason why I done a direct entry rather than waiting for confirmation was because the odds of price giving me like a 1 minute confirmation here when, you know, we're on the M1 and the target is not much higher, I just thought, you know, it's price is less likely going to give me that chance to get in if I wait for another confirmation. So I just set the limit. Didn't work out, but it's all good. So now let's look at the real trade, the trade that I actually missed and why I missed it. So we're looking at the trading range now, which is actually, so I thought the trading range was this low. Whoops, wrong thing there. This, what's going on? Oh, that's right, wrong tool. I thought it was this low to that high, but really and truly, it's this low here to this high, right? That's the real trading range. So I took the loss here. And then if you look at this, what we do have here is a couple more imbalance zones on the M5. So you got a nice imbalance zone here on the M5. Fair value gap, a nice imbalance zone here on the M5. So this is two fair value gaps, but where's price going to trade from? If I'm right and price is not reversing already, or if it doesn't want to take this whole range out, where's price going to trade from? And these are two options. So you've got now these lows as you look at this now as liquidity, but you could also look at these lows as liquidity as well, right? 1, 2, 1, 2, 3, 1, 2 levels of liquidity. And at this point, the only time you would actually set a limit now, and you know, for the best entry, I wouldn't set a limit personally. Set a limit here on my stop loss here. Too risky for me. That could be a thing for sure. Set a stop in an entry here. But as I took that loss, I'm not gonna lie to you. For some reason, I'm not sure what happened to my psychology, but I was like, maybe I'm just wrong completely. So as price came in, let's go into the M1. I'm gonna show you what happened. Price came in, moved into this fair value gap. Okay, so we can delete this one now. You can delete this low as well, right? And you can see here, price wanted these lows here. I'm gonna put it in a black line, make it clearer. Cool. So price wanted these lows, moved into this M1 imbalance fill, respected this inducement low, which was near the extreme, and then price actually gave us absolutely beautiful confirmations. And what am I looking at? So I'm looking at this now, M1, right? My target is still the bullish high, the external range liquidity on the higher time frame. The range itself still is being respected. It's still not been broken yet. So all buys are still valid, right? I'm now seeing, okay, so we've got a sweep. Well, I mean, my point of interest, I've got a sweep of a low. So if I want a confirmation, I really want this to be broken, this level here, and to give me a break of structure or market structure shift. Let's see what happens now. You play on, okay, giving me equal highs, not a problem. And then now look, beautiful. So we've had equal highs, but we had the sweep of liquidity into the zone, which was this low. We had a failure swing, so price came down, respected this low, failed to make a new low, went bullish, gave us a new high. This is still a problem for me personally, in the sense that price could want to just maybe mitigate here and then go lower. Liquidity into the order block, then go lower. But what are we looking at? We're looking at, on the M5, we're still bullish. So the M5 trumps the M1 in this case, right? So that's what I should have been thinking at the time. And then even here, price breaks this high now. So I have no reason to believe that, we're gonna still be bearish. So why, I could have easily just set a limit here. I would put my stop loss below the low, if I'm honest with you still. Or stop loss at least below this low here. And to be safe, you could enter here or whatever you want to do. But let's see what happens. Because I was watching this play out. But price beautifully comes into the M1 imbalance fill. Could even be aggressive and put a stop loss there if you really wanted to. I wouldn't do that personally. This is a fine stop loss. So if you're going to be really safe, 2.8 pip stop loss. But play on and look. Now we're in the money. Price is looking real bullish now. That bullish move there on the second time frame, that wick, it's come back down again. It's giving me another order flow entry. And just look at that flipping price action, guys. So beautiful entry here on the M1 in balance fill. Another entry here. Let me quickly move this out of the way for a second. Yeah, another entry here. Order flow entry in balance fill. Another entry here in balance fill. So price gave me optimal times. I could have stacked entries if I really wanted to. I had so many chances to get in on this trade. The best one would have been down here, of course. Stop loss below this low. Or let's just be safe. 2.8 stop loss right below the complete low. And then targeting at least this high. If not, that high. And let's be honest, price typically will go a little bit more than just the high, right? So if I wanted to be really, aggressive, I set a 10R target or reduce the stop loss. It would give me 10R as well. But 2.8 pip stop loss on that first mitigation on the M1 imbalance fill. Target being the second high time frame target, external range liquidity. Press and play, boom, blown through. Absolutely blown through. Easy, 10R trade. And I missed this trade. I missed that trade. And then we have one more trade. And at this point, I was just off the charts completely. I'm not going to lie to you. But external range liquidity has been taken. This black line is external range liquidity. Now what are we looking for? This is where you guys are going to be like, oh my days. Because it gave me my perfect trading scenario again. So external range liquidity has been taken on the left-hand side. So you're expecting a reversal now, really and truly, aren't we? Right? External range liquidity into internal range liquidity. Now we've got internal liquidity swept. Cool. Market structure shift or break of structure. The question is, some people might say this down here is all just liquidity that's being induced for price to then go higher, and that is valid. So I wouldn't enter personally. I wouldn't enter here or up here. Like I wouldn't enter up there personally. I would want more of a confirmation. But look, price came back up, gave the failure swing, came back down, broke structure. Now we're in the money. Now we know what's going on. And according to my trading model, this is perfect for me. I've got the high, two highs, the failure swing, the break of structure, and I've got the trap. Look at that. Price comes back up. And this is why I like to enter on the liquidity inducement rather than on the final, say, imbalance fill. Stop loss above the high. And then first target would have been there, 8R. Second target, I'm looking at this. Okay, I'm like, all right, we just hit external range liquidity. Now we want to go internally. My first target personally, I would have gone for that. My second target would have been here, 16R. So first target, what's that? 8R. Second target, 16R. My ideal target would be this one here, my main liquidity point. And that would have been 22R. But let's keep it humble, right? Let's just say went for the 16R target. Let's see how it plays out. Absolutely beautiful. And even in this, you've got this order block here, right? And then you got on the 5 minute, 7.15 actually, it's a bit easier. Price again, as it's moving down. So it's telling people, trying to induce players or traders to go long in the sense that it's slowing down, it's respecting price. It's, on a smaller time frame, it's giving us like chocks or market structure shifts. But what all it's doing really is creating channel liquidity. Creating channel liquidity into the order block, respects the order block, and then we go lower again. And then target is hit during Frankfurt session on that day. And then if we keep going up until the end of the week, NFP comes, boom, smashes my main target. Perfectly 22R. Obviously, I would not have had 22R if I caught the trade because I take partials along the way. But again, the trading model is playing out. And listen, this is recent price action, guys. This was literally last week. This was the last trading day. So this was on Friday. This was on Thursday. Multiple trades on that day, Thursday last week. And then this is Friday, NFP day, beginning of April. So yeah, so hopefully you guys learned something from that video. And don't forget guys, drop a comment if you found it valuable, and do me a favor and hit like. If you want to watch more trade breakdowns, and hit that video in the corner, because there's plenty more. God bless, take care, and we speak soon.